6 ways rich people make money with inflation. Are you finding a way to make money from this inflation? Do you often ponder how people are coping with the ongoing inflation? And how do rich people become even richer in the inflation, whereas poor people even struggle to make a living? Well, let us tell you, it's because of the strategic measures that rich people take before inflation that give them profit. The economy is recovering from the pandemic, which has caused inflation to soar to its highest level since 2008. We don't simply mean asset prices like those for homes, stocks, and so on, but also pricing for goods and services. Because every difficulty offers an opportunity, some people are profiting from inflation, even while the majority of people are suffering because of it. There's also the widely held belief that inflation will not decrease quickly. The tendency is that anticipation thrives on itself and raises prices. Therefore, we should stop wasting time and begin fighting inflation. We've compiled some of the ways in which rich people make money through inflation. Number 1, invest in real estate. Investing in real estate is one of the easiest and greatest ways to benefit from inflation. Whatever the real estate rate of inflation may be, it makes little difference because throughout this time, home prices are rising quickly. According to several studies, real estate prices increased by 18 to 20% during the current pandemic-related inflation increase. This indicates that real estate investors made huge profits in addition to beating inflation. The best investors, however, went beyond simply purchasing homes and taking out mortgages, as leverage can convert good purchases into excellent ones, particularly when interest rates are at historically low levels. So if you have some savings on hand, then instead of keeping that money aside, just buy a house. Real estate values will rise and keep pace with inflation because everyone needs a place to live, whether it's an apartment, a single-family home, or another type of structure. Rental property is an excellent way to invest in real estate because it provides an income stream. You also get to protect yourself against rising rent costs. Rents usually increase as inflation soars, just like it does for every other consumable commodity. 2. Gold. Everyone is aware that gold is a metal, a precious metal that has been worn as jewelry for a very long time. However, due to its value, gold is also seen as a traditional investment. In the past, wealthy individuals were thought to accumulate gold as an indication of their wealth. Well, gold is still an asset, and its price rises quickly with inflation in the modern era. The price of gold has doubled since 2018, thus investing in gold will never result in a loss. The fact that gold has always been an asset that maintains wealth, particularly during crises, is what makes it distinctive. The price of gold increases whenever the future appears uncertain. Gold has maintained its worth since the dawn of civilization, whereas the US dollar has lost nearly 90% of its value in the past 100 years. In times of instability and trouble, it acts as a cushion to lean on. Therefore, you should invest your money in gold if you have money and wish to save some of it for tough times. Although it is not an active asset like real estate that generates income through rent constantly, it is a passive asset that will generate income when sold in the future. 3. Stocks. Stocks are one of the safest and least dangerous ways to make money, making them particularly useful during periods of inflation. Purchasing stock entitles you to a portion of a company. For this reason, they're also known as shares. When there's an excess of money in the economy, a business's value increases, so you see inflationary growth. Additionally, since that money is typically used for necessities and wants, businesses expand faster, meaning you're not just combating inflation but also benefiting from it. The stock market has drawn potential investors since its beginnings. Particularly during the COVID epidemic, the stock market hit historic highs. Despite all of this, there must be a problem if you're not making enough money. To become rich from stocks, you need to follow some rules. Invest in what you're familiar with and make purchases that fit your criteria. Buy the stocks of a small business for a long-term investment if it's going well. Avoid holding stocks for too long, as this could have a negative impact on you. And avoid purchasing more shares than you can manage. 4. Treasury Inflation-Protected Securities, or TIPS. Bond investing may seem counterintuitive, given that fixed-rate debt often suffers from inflation. With inflation-indexed bonds, which give variable interest rates based on the rate of inflation, this is not the case. The Treasury Inflation-Protected Securities, or TIPS, which are indexed to the Consumer Price Index, are a common choice in the United States. the value of a TIPS investment increases in tandem with CPI increases. In addition to the base value increasing, the number of interest payments will also increase because interest is based on the base value. TIPS has a fixed interest rate and pays interest twice annually. Along with inflation, interest payments can fluctuate in value. Periodic inflation adjustments are a benefit of TIPS that are absent from traditional fixed-rate bonds. The ideal situation is to purchase TIPS before inflation occurs. The principal and interest increases will then be fully utilized when inflation rises. Given that TIPS are backed by the full faith and credit of the U.S. government, holders can trust that they will receive their principal back. The best investments for retirees looking to protect their principal are TIPS. 5. Various commodities. Oil, sugar, and precious metals are examples of commodities, naturally occurring materials or things that are gathered and processed for use in human activity. Agribusiness products, natural resources, and tangible assets that are exchanged publicly are referred to as commodities. Far older than stocks and bonds, commodities are one of the earliest sources of wealth and investment. In actuality, the trading of commodities has been connected to the strength of many civilizations and nations. Raw minerals and agricultural products like oil, copper, cotton, soybeans, and orange juice are examples of commodities. In a context where there's inflation, the cost of raw materials typically increases concurrently with the cost of finished goods created from those raw materials. For instance, increased oil prices increase the cost of transportation and gasoline. Although investing in commodities may not appear alluring, it can be a good hedge against inflation. During uncertain times, commodities are frequently viewed as safe haven investments. So put money into them and wait for the opportune moment to sell them. The prices of commodities are publicly reported and exchanged on open markets. As long as you have the appropriate plan and can keep an eye on the markets, they may be highly rewarding. 6. Debt. Many of you may have a very unfavorable perception of debt. Yet, debt can be very beneficial, particularly in times of inflation. If $1 today is more valuable than $1 tomorrow, that means I will make money if I borrow $1 today and I pay it back tomorrow. The world's largest corporations, including Amazon, Facebook, Microsoft, Apple, and others, started borrowing money when the Fed dropped interest rates and began purchasing corporate bonds, even though these companies did not need it at all. Apple currently has a cash reserve of more than $200 billion. However, it continued to borrow money because there's no reason to use your own money when you can invest in the S&P 500 and earn at least a 10% return while only paying 1% interest on your loan. To boost its net value in the face of inflation, Apple took on good debt. You should understand and research debt as part of your overall financial plan. The use of good debt refers to borrowing that enables you to create lasting capital. Good debt is debt that is utilized to finance an item that will increase your net worth or provide you with income like a wise investment. Consider inflation an opportunity to review your entire portfolio because it occurs with or without our consent. The secret is to keep your money in assets that are inflation hedged. Rich folks typically don't carry a lot of cash. Speaking of the world's richest individuals, they are so wealthy because they hold a particular percentage of the companies they have created. Their wealth increases as their firms expand. By using one of the strategies we've covered, you can still benefit from inflation even if you only have a few $1,000s. It's time to say goodbye for today. What are your views about these ways? Make sure to tell us in the comment section. Do like and share the video, and we'll be back with a great informative video soon.